Welcome back. So we're diving into the real estate time machine today. We are looking at the landscape for home buyers in 2026.
2026? Wow. It feels futuristic, but honestly, for anyone trying to buy a house right now, the struggle is very present-day real.
Exactly. And according to a new report from the National Association of Realtors, or NAR, the affordability picture is finally starting to look a little brighter.
Brighter is good, because I feel like for the last few years, first-time buyers have basically been stuck on the sidelines.
You nailed it. Jessica Lautz from NAR actually said that exact thing. Buyers have this huge demand for the American dream, but they feel left behind because they're losing out on the wealth building that comes with owning a home.
Right, renting is fine, but you aren't building equity. So how are people actually getting in the door in 2026?
Well, they are getting creative with the math. Here is a wild stat for you. The average down payment has hit 10%.
Wait, 10%? That is huge. I feel like for a long time people were aiming for like 3 or 5%.
It is the highest level in 40 years. People are realizing that putting more money down up front lowers that monthly payment to something they can actually live with.
Okay, but where is that cash coming from? Saving 10% of a home price is no joke.
It's a mix. Personal savings, obviously, but the report says people are raiding 401ks, IRAs, selling stocks, or getting financial gifts from family.
The classic bank of mom and dad.
Whatever it takes to lower that loan amount, right?
So big down payments are one strategy. What else are they doing to hack the system?
The return of the ARM, the adjustable rate mortgage.
Ooh, those have a bit of a reputation.
They do, but buyers are warming up to them again because they offer a lower initial interest rate. It makes those first few years of payments way more affordable.
It makes sense, but you have to be careful, right?
Definitely. A lending manager from Chase weighed in on this. She said ARMs are great for getting your foot in the door, especially if you don't plan to stay in the home forever.
But you have to know how the rate adjustments work later.
Exactly. It's not a set it and forget it strategy. It's a get me into this house now strategy.
Okay, so what if you don't have a rich uncle or a massive 401k? Is there any help out there?
Yes, down payment assistance programs are huge right now. Large banks, like Bank of America, for example, are offering grants.
Grants? As in you don't pay it back?
Correct. We're talking 3% grants, up to $10,000, sometimes up to $17,500 if you combine programs.
That is real money. That covers closing costs and then some.
And don't forget the builders. New construction is playing a big role here. Builders are offering incentives and price reductions, averaging around 5% just to move inventory.
So if you're shopping, you shouldn't just look at existing homes. Go check out the new developments.
Specifically, look at townhomes. The National Association of Home Builders says the share of townhomes is rising. It's a way to get younger households into ownership at a lower price point.
I love a good townhome. Less yard work, usually cheaper than a single-family house. It's a smart entry point.
So, looking at the big picture for 2026, interest rates are easing, inventory is climbing, and affordability is slightly improving.
It sounds like the door is finally cracking open a bit.
It is. It takes some creativity. Maybe an ARM, maybe a townhome, maybe a grant, but the opportunity is there.
Love to hear it. Thanks for the breakdown.